Every financial advisor is in the business of storytelling. Value, that's a story.
Momentum is a story.
Multiple is a story.
What are the mechanisms that are behind these stories? We have a world that feeds us news through algorithms. Passive investing is the same thing. It's an algorithm.
How do these interact? Because on the one hand, you're looking at, here's the story being told to you, and this drives markets. On the other hand, you're effectively saying, we're betting on the fact that that matters a lot less because passive is going to drive the boat going forward. We've got Mike Green from Simplify. People may also know him from his Substack, Yes, I Give a Fig. Ben Hunt from Epsilon Theory and Percient. We're not going to talk about either of those things. Instead, surprising nobody, we're going to talk about the real world and trust, which is, I think, where we're at. I will summarize some of their work very briefly, and unfortunately for them, Ben's work has been largely about our inability to see media correctly, understanding the narratives around us as we invest. He's also done a lot of work on just sort of the general geopolitical and sort of narrative-driven society we live in. And documented a lot of sort of fiat world lately, how we could just sort of say things into being. Mike has done an enormous amount of work on market structure, particularly around passive, which I fully agree with, and you should all go read that. He's also done some great work recently on income inequality and the problems of redistribution, which you should also read. All of those things are pretty much a bummer, and that's what I want to talk about. I want to talk about how do we get past this bummer? What's the and thus of these, what I think are very accurate observations about stuff that's wrong and stuff that's really, really difficult. So with that, maybe my first question, Ben, maybe I'll come to you. You put some money on the table. You're running a model portfolio now. So you actually can say you have an investment opinion, which seems to be sell everything related to money and buy rocks. Mm-hmm.
But yeah, that's pretty close. It is pretty close. But there are things that I don't have an investment opinion on that I do have a strong opinion on for the purpose of this conversation, like technology, right? I don't have an investment position in tech, and the reason why.
Meaning you'd be neutral, like you're neither. It's we should all be all in, nor are you saying we should short this to the ground.
So, and I know we want to separate our investment personas, right, from the conversation, but the investment persona for me is, I have no idea what reality is, and neither does anyone in this room. You really don't. What I think I can show you is how reality is being presented to you, and I think that drives the stories we all tell ourselves, and we all do it. It is not a bad thing per se. And I'm not picking on, your last, guess, but value, that's a story, man. Multiple is a story. It gets ingrained in us. It's the water in which we swim, so we don't see it as story and malleable, right? So putting my investment hat on, what I'm looking for is when the presentation of reality gets way out in front or way behind what reality is, right? And so that's why I don't have a view on technology from an investment perspective. Although personally, I am so over the top excited about what's possible with technology to solve the problems about trust with institutions. How do we overcome, or how do we inject life into the institutions we've got, which are just decaying and there for the benefit of not us, right? So it's distinguishing the investment world and yes, I'm very negative because those are the narratives today where we've gotten so far away from where you can see we are, where there's a clear negative story around, say, private credit. It's going down in price. And I have no idea what the actual default rates and the like are going to be. I don't care.
Because you just know from looking at the narrative.
Exactly.
Let's shift here a second. Your work is largely similar in the sense that what you're trying to do is to actually shine light on reality and invest based on that. as opposed to shining light on what we think reality is. How do you take some of the stuff you're looking at, which I think is much longer cycle, right? We're talking about things like wealth redistribution. You're talking about, did the private credit story take off last month? On these long cycle issues like the rise of passive and income inequality, can you invest against or for those?
Well, I think you can. As you know, we've been doing a lot of work. And to your point, what Ben and I are doing is actually remarkably similar. We have a world that feeds us news through algorithms, right? Ben is just helping you to identify the algorithms, what they mean, what the implications of that. Passive investing is the same thing. It's an algorithm, right? So all I'm doing is basically disaggregating and saying, this is how it should be affecting securities. And unfortunately, it seems that that is very true, right? We are seeing more and more evidence in support of my hypothesis. When you do that, when you effectively clear it away and kind of open up the matrix, once you start to understand those numbers that are flowing through, all sorts of stuff becomes investable. And so, we've talked candidly about this, like the trade that quote unquote made me famous was the XIV trade, the Volmageddon component. That was literally built off the exact same components of my work around passive. What I hadn't realized at the time was that I had the gambler's curse because I happened to stumble into an index that had a single underlying security. So the two were the same. When you're talking about the S&P, it's an index with 500 underlying securities, 503 to be precise. But when you think about that, you have to invert the problem. How are the index flows affecting each individual security? And to that point, you come back to exactly what Ben was saying before. Value is a story. Momentum is a story. What are the mechanisms that are behind these stories is really what I'm trying to figure out. And we have had some incredible breakthroughs that I think are creating the first investable products around this approach.
Would you both agree that this is tough to swallow for an advisor or an investor? Because like you're talking about investing largely based on vibes. I mean, you're measuring vibes really well.
1,000,000%.
Right. And you're talking about investing on structural flaws that half the market doesn't think exist. Right?
Half?
90% of the market doesn't think exist. Right? So that's a tough sell. Right? So are you guys just destined to be lonely in this trade? Or do you actually think that there's, not to get really crass about it, but there's so much alpha people will end up noticing anyway?
Well, I think that's ultimately what you have to count on, right? And so one of the things that I've been very transparent on is that for the vast majority of people, the best way to invest was simply buy the S&P or the total market index and recognize that you were effectively riding a wave, right? Now I actually have solutions to that, right? So we will be introducing some products that effectively say, here's how to ride the front of the wave, right? And you can actually get out ahead in that manner. There's moral questions around that, right? Is it the right thing to do? Well, for the people who invest with me, yes. And it does create enough alpha that it allows me to do all sorts of other interesting things, like start thinking about how do you protect against the eventual downside? What can you do? These are all things that open up when you begin doing that. But yes, that's really what it boils down to. If I'm going to take it from 10% of the world believes me to 100% of the world believes me, there's only two possible outcomes. I demonstrate that it works, right? Or the event that I've forecasted will occur. And that event continues to be off into the future. And so, you're kind of forced into this. As you know, I've picked up the sobriquet of the Cassandra of passive, right? What's Cassandra's curse? She's right, but nobody believes her.
Right.
I've got a slightly different issue. So every financial advisor is in the business of storytelling, right? And they know that's how the world works. It's you're telling stories. And similarly, anyone who's been in markets long enough knows that what matters, I'll say marginally, is the story, right? So for me, it's not that it's a different sort of problem for you. Like the challenge for me is to say, no, the storytelling, you can actually measure it and quantify it today. So it's a different kind of problem.
Okay, but even there, like that's a very fuzzy thing to say, like that you can measure this story. How do these interact? Because on the one hand, you're looking at, here's the story being told to you, and this drives markets. On the other hand, you're effectively saying, we're betting on the fact that matters a lot less because passive is going to drive the boat going forward.
Can I start?
Yeah,
so what connects all this is that the tools now to actually, for me, measure and visualize and show impact of story. For you, the ability to disaggregate those 503 entities, right? To say, no, the passive algorithm is really here and you can play that. This is the excitement I've got about what is possible now with the technology from a bottom-up perspective. We were talking about this earlier. I was in San Francisco a couple of weeks ago. I haven't seen that sort of energy in San Francisco since .com days. I mean, forget Web3, whatever that was, or forget crypto. That there is that almost a manic effort, like we're running out of time. We've got to hurry. And I think there's something really to that, because I feel manic with our work. I think you feel manic with your work, that we're in this period of time where we've got the tools, we've got this subsidized technology to try to build this stuff and show the world what we mean. We got to go, man. Let's go.
Well, let's pivot into AI here. We got tons of time. I gave us all the time we had so that we could just get into this stuff. All of us use AI every day in our work. I don't know how many hundreds of dollars y'all are on the hook for every month, but it's a lot of $100 for me. Yet, I think we all have concerns about AI, what it's doing in our environment. I'm with you, Ben, that yeah, we're in this great moment where we get all the subsidization from private equity, and you got to take those, you got to lean hard when you get those opportunities. They've happened a few times in my career. But at the same time, AI has got this new quality that didn't exist in San Francisco, which is that it's somewhat self-digested, in that the more you use AI to make better tools, the more you realize you don't need a particular AI. The more you start realizing that the value is in you as the human figuring out how to use all of these fairly generic tools when you actually strip them out. So how do we think about that? Because that implies that this excitement is going to fizzle very, very quickly when there is no moat for anybody.
This is what I'm saying. Now is the time to build and to make, because, the token pricing we get today, that's not going to exist in a couple of years. There will be, whether it's by government fiat or by something, right? This is going to end, right? This is the...
Just because somebody else has to pay for the compute. Is it that simple?
Exactly.
Okay.
Exactly. And the compute's just going to get more expensive. It's not going to be subsidized. And so we're not going to be the beneficiary. I remember when an Uber ride cost $5 because all the VCs were subsidizing Uber and Lyft, and it was really cheap. And now I look at it and say, what the? And that's what's going to happen here. So we got to go, man.
So it's interesting because I'm not entirely sure I agree long term, but short term, I think you're obviously correct, right? My wife and I had our first child during the peak of the .com cycle. And I had a very simple philosophy: buy everything online, because this being subsidized, right? So cribs and clothes and everything else was shipped to my house for free, right? You remember Cosmo.com, we would get, pistachio ice cream delivered for my wife's cravings rather than me having to go out. And it was cheaper than going to the local store because it was being subsidized by VCs. At the same time, the core of what was actually happening was the rollout of broadband, which has irrevocably changed our world. And the assumption there was the price was going to stay high, right? And that it was going to be limited in people's ability to access it. I almost have the exact opposite view, which is that what we are actually seeing right now is effectively the dimensions of the sandbox being, described. And then prices are going to collapse, and all sorts of new interesting stuff will come out, right? It's much cheaper to run a data center when you've restructured the debt service into effectively a distressed asset.
I hope you're right, but what you're just, one of the things that we've all been the beneficiary in this tent, in this conference, is this artificially depressed cost of capital, right? So yes, there's been the subsidization of token processing today, just like there was the subsidization of online everything and broadband in the past. For the last 20 years, we've had the subsidization of capital. That's totally changing. And that's going to hit everyone in this room. So it's not just that, oh, we're talking about, your chat GPT bill is going to go up. The cost of investing is going up, and it's this tsunami, this flood of liquidity that we've had in the world, and its reversal today, with everyone sopping up trillions of dollars, nations, data centers, everyone needs money. That tide is going out, and it's a largely imperceptible tide. But you combine that with the excesses of this financial bubble that we've had over the last 18 years. Yes, it's going to be this. I hope it ends up with being creative destruction, but in our world, the finance world, I just see a lot of destruction right now.
I want to pick up on this because, part of what we're counting on here is we're getting all this great subsidy for all this great tooling we're going to use to go build a bunch of things that we need less capital, right? I need to hire fewer people. I'm just using free compute to do things I used to use people for. But is all of this predicated on a private credit bubble bursting? If a giant capital bubble bursts, your work would suggest, well, that's a step towards income or wealth redistribution, right? Almost by definition, asset owners get hit proportionally harder than non-asset owners.
It really depends, right? Because we've had that happen in areas like pharmaceuticals, right? Where, long-standing pharmaceutical treatments like insulin, et cetera, have been acquired by financial actors. Those financial actors have exerted market power. So, we have to be really careful in describing what the actual issue is. I'm endlessly hopeful about the ability to deploy AI at scale and at very low cost. And I think that's going to create opportunities that are extraordinary. At the same time, we have to recognize that this is probably the first general purpose technology that has a direct analog to something like a steam shovel or a train, right? Which replaced hundreds of individuals with one power worker, right? Reducing the opportunities for employment and construction, but radically changing the structure of our society so that we have skyscrapers that allow us to build far more dense urban environments that we couldn't have before. Those more dense urban environments in turn change our behaviors, right? So I don't know exactly how it's going to play out. I generally lean towards the framework that says it's going to end up positively. I know that we would not withhold eyeglasses from people who need eyeglasses. They're relatively minor in costs and they raise human productivity to an extraordinary degree. I would be very sad if we end up in a world in which access to artificial intelligence augmentation, no different than eyesight augmentation, becomes restricted to an elite class because of price. That would be far more terrible than almost anything I can imagine.
I mean, I can create the argument that the opposite is probably more likely, where AI will be, we'll all be treated by the AI doctor on the front end of the emergency room, and the very, very rich people will have private doctors, right? Which, that inversion of status over economy, I think we've seen in many markets over the years. I do want to ask you guys a slightly different question here. We talked about AI. We talked about all the bummers that may be coming. We're all parents of young adults. What are you telling your kids? When they're making decisions about, do I do this job or that job, or get married or not get married? We all have kids right in this zone right now, and I'm clueless. What are you telling your kids so that I have a clue?
You go first.
Great, thanks.
Lucky winner.
So 4 daughters. The youngest is graduating college next month. The oldest so they're all in their 20s. I'll tell you, the short answer is I don't tell them anything. I really don't. I mean, because they're grown-ass women, right? And I really mean that. And so they've chosen, 2 of them have chosen to do legal path, right? Which to me is okay, you're absolutely that's going away, right? But I also feel like that process of being a lawyer, it's the difference between my job as a lawyer and being a lawyer, which was what the law schools always say, we teach you how to think. And there's something really true to that. Right? So I'm fine with them. Not that it matters whether I'm fine with it or not. They're going to, like I say, they're going to do whatever the hell they want to do. But I am fine with them being lawyers because they are being lawyers. They're being thinking human beings, I think, applying their spirit to human interactions. Great. And the youngest one, I don't know what the hell she's going to do. but it's, I try not to be didactic about it. I think that's the important thing with our kids. Because fuck if I know where this is going. And,
Right.
and
So you're just as clueless as I am. That's what I'm
100,
hearing.
oh my God, yes. We're all clueless, and that's great. The worst thing I think would be to say, daughter, I really think you should, what is it in The Graduate? Plastics. I don't.
That was the coding was the answer for the last decade, right? So there we are. Mike, how about you?
I am a little more hopeful than Ben, right? There's two things. One is, to your point on my Substack, like I've been writing a lot about exactly these issues. And the advice that I give people is really dependent on their station in life. My kids are very fortunate. They have buffers, right? And so I tell my kids, take risks, right? Because if worst case scenario, dad'll bail you out.
Right. You can always move home. Yeah.
I don't want them to move home. But there are solutions that are short of that.
Notionally,
Yes, exactly.
they can always come on.
And it's interesting to watch because I have taken with my three kids, I have boy, girl, boy. My oldest son basically pursued I'm going to learn how to program my brain and take philosophy as his major. Discovered that was totally useless. The other two took my advice and went for vocational educations. One went to Wharton, right, which is a very prestigious vocational education in finance. And as she said to me when she graduated, you Miyagi'd me. I'm like, yes, I did, right? You thought you were waxing on and waxing off, and the reality is you learned how to do finance. And now she has a great career ahead of her, and she's discovering, exactly as I did, that much of finance is actually bullshit as we do it. But the opportunity set that it creates, what finance is really about is taking resources from the future and pulling them to the present, right? And when you think about it in those terms, the world is your oyster. My youngest son went to another vocational academy, right? The Naval Academy. He's graduating. He's going into nuclear submarines. And he literally sat down at the dinner table with me the other day. He's like, Dad, do you realize the American public is going to pay me a 6-figure salary while I get a master's in nuclear engineering? I'm like, that was the plan, right? So I'm actually extraordinarily hopeful. I just in general encourage people to take a realistic assessment of the resources that are available and adopt your strategy tied to that. If you come from a family that doesn't have buffers, that doesn't have resources, that doesn't have dad to bail you out, you got to follow a safer path. You got to take less risk.
We are out of time. Thank you guys both so much. It's been great catching up with you. I feel like I won the lottery.